President Trump's significant legislative proposal, titled the One Big Beautiful Bill Act, has narrowly passed the House of Representatives. The vote was extremely close, ending at 215 to 214. This indicates a deeply divided chamber, with 2 Republicans joining all Democrats in opposition. 1 Republican member chose to vote present, not taking a side. The bill itself is a massive document, reportedly over 1,000 pages long, and was released to lawmakers just hours before they were asked to vote. This rapid timeline has drawn criticism and raises questions about the thoroughness of review. The legislation now moves to the Senate for consideration and debate. This multi-trillion-dollar tax and spending bill represents a substantial attempt to reshape American fiscal policy and national priorities. It touches upon nearly every aspect of the economy, from individual tax burdens to corporate regulations, and from social welfare programs to national security spending. The sheer scale of the proposed changes means that its effects would be felt by virtually all Americans. Understanding the core components of this bill is therefore crucial for citizens trying to grasp potential policy shifts. It seeks to enact many promises made during President Trump's recent campaign, signaling a clear policy agenda. The financial implications of the bill are considerable, according to several analyses. Independent estimates suggest that the legislation could add approximately $5.2 trillion to the United States national debt over the coming decade. The Congressional Budget Office, a nonpartisan federal agency, has projected that the tax policies alone are likely to increase the federal deficit by nearly $3.8 trillion. For the next fiscal year, the budget deficit is projected to rise by about $600 billion. These figures have raised concerns, leading credit rating agency Moody's to downgrade the U.S. credit rating, citing worries over the growing debt and deficit levels. At its core, this bill proposes a complex mix of tax cuts, significant adjustments in government spending, and new rules and regulations across various sectors. It outlines where taxpayer money will be directed, highlighting new areas of investment while also specifying programs facing reductions. For instance, there are substantial allocations for border security and immigration enforcement, alongside notable cuts to social safety net programs and environmental initiatives. The following sections will explain who stands to benefit from these changes and who might be adversely affected. A central feature of the One Big Beautiful Bill Act is a massive $4 trillion tax cut. These reductions are structured to primarily benefit wealthy individuals and large corporations, according to detailed analyses of the bill's provisions. Many of the tax cuts from President Trump's 2017 Tax Cuts and Jobs Act are set to become permanent under this new legislation. This includes maintaining lower marginal income tax rates for individuals across various income brackets. Furthermore, the bill aims to preserve a larger standard deduction for taxpayers and maintain a higher threshold for the estate tax, which typically affects the wealthiest families when they transfer assets to their heirs. These changes represent a long-term shift in the tax landscape. The bill also introduces several temporary tax benefits aimed at providing some relief to a broader range of taxpayers, though these are set to expire. For instance, the standard deduction is slated for a temporary increase, $1,000 more for individuals, $1,500 more for heads of households, and $2,000 more for married couples filing jointly. This particular increase is effective only through the year 2028. Additionally, there is a temporary $500 bonus to the existing child tax credit, which would bring the maximum credit to $2,000 per child for eligible families. A novel proposal includes the creation of Trump accounts, where children born between January 1, 2025 and January 1, 2029 would receive $1,000 for stock market investment. Beyond these measures, the legislation includes other temporary tax write-offs and incentives designed to stimulate certain economic activities or provide relief to specific groups. One notable provision temporarily eliminates federal taxes on income earned from overtime work and tips received by service employees. The bill also introduces new temporary tax exemptions for income derived from interest on loans taken out to purchase cars assembled in the United States. For senior citizens aged 65 and older, with adjusted gross incomes below $75,000 for single filers or $150,000 for married couples, an additional $4,000 deduction is made available. Importantly, all these new tax incentives are scheduled to expire at the end of 2028. The bill also significantly raises the cap on the state and local tax, or SALT, deduction from $10,000 to $40,000 per year. A significant portion of the new spending proposed in the bill is allocated towards funding mass deportations and enhancing border security, fulfilling a key promise from President Trump's 2024 campaign. The legislation earmarks $45 billion for Immigration and Customs Enforcement, or ICE, detention facilities, which would expand the capacity to hold undocumented immigrants. Another $14 billion is designated for deportation operations themselves. The bill also provides billions more for the hiring of 10,000 new ICE agents by the year 2029. Furthermore, over $50 billion is allocated for new border fortifications, widely interpreted to include the construction or reinforcement of a wall along the U.S.-Mexico border. The bill also introduces new fees for immigrants seeking asylum or other forms of relief through immigration courts. While the bill proposes significant tax cuts and new spending in certain areas, it also mandates substantial cuts to several social safety net programs. Medicaid, the federal and state program that provides health coverage to millions of lower-income Americans, is targeted for funding reductions. These cuts are expected to directly affect access to health care for some of the nation's most vulnerable populations. Similarly, the Supplemental Nutrition Assistance Program, or SNAP, commonly known as food stamps, which currently assists over 42 million Americans in affording groceries, is also slated for significant funding decreases. These changes signal a major shift in how the government approaches support for low-income individuals and families. Compounding the impact of these funding cuts, the bill introduces new, stricter work requirements for recipients of both Medicaid and SNAP benefits. It is estimated that these new rules could lead to a substantial number of people losing their benefits. Projections suggest that as many as 5.2 million individuals could be removed from Medicaid rolls, and nearly 11 million people could lose their SNAP assistance due to these new eligibility criteria. The legislation also accelerates the implementation timeline for previously planned work requirements for Medicaid recipients, putting these changes into effect sooner than anticipated. Beyond these major programs, the bill also includes reductions in funding for various education programs, though specific details on these cuts are still emerging. The One Big Beautiful Bill Act also marks a significant reversal in environmental policy, particularly concerning green energy incentives. It systematically phases out many of the tax incentives for electric vehicles and clean energy technology that were established under the previous administration's Inflation Reduction Act. For instance, tax credits aimed at making cleaner cars more affordable are set to end this year. Incentives for new wind and solar energy projects will be severely limited, available only to projects that commence construction within 60 days of the bill's enactment and become operational by 2028. This short time frame poses a considerable challenge for the renewable energy sector, further impacting the clean energy landscape. The bill axes clean energy manufacturing tax credits entirely by the year 2031. Subsidies designed to encourage homeowners to make energy-efficient upgrades to their properties, such as installing better insulation or more efficient heating and cooling systems, will be stopped after the current year. In addition to these environmental policy changes, the bill raises the U.S. debt limit by $4 trillion. The Treasury Secretary has predicted the government could hit the current limit by August, risking a financial crisis if the ceiling is not raised. The Congressional Budget Office also warned that the substantial increase in debt caused by the bill could trigger approximately $500 billion in mandatory spending cuts to Medicare, due to a budget control law enacted in 2011. This is a politically sensitive point, as President Trump had previously pledged not to cut Medicare benefits. The bill also provides a significant boost to defense spending. With the One Big Beautiful Bill Act having narrowly passed the House of Representatives, its journey is far from over. The next crucial step is consideration by the United States Senate. Given the bill's controversial nature and the slim majority margins in the Senate, substantial modifications are widely expected during the Senate's review process. Senators will conduct their own debates, committee hearings, and amendment procedures. As mentioned, the bill itself is an extensive document, exceeding 1,000 pages, and its release just hours before the House vote drew considerable criticism, suggesting many aspects may face renewed scrutiny. If the Senate does indeed amend the bill, it would then need to return to the House for another vote on the revised version. The distributional effects of this bill, meaning who benefits and who loses out, are a major point of contention. Analyses project that wealthier taxpayers are likely to see the most significant financial gains from the proposed tax changes. For example, household resources for the highest earners are projected to increase by an average of 4% in 2027 and 2% in 2033 under this plan. Conversely, the poorest taxpayers could experience a decrease in their resources, potentially by as much as 4% by 2033. This projected decline for lower income groups is primarily attributed to the reductions in benefit programs like SNAP and Medicaid, combined with the introduction of stricter eligibility requirements for these essential services. The political reactions to the bill's House passage have been starkly divided along party lines. House Speaker Mike Johnson and other Republican leaders celebrated the vote as a significant victory for hardworking Americans and a fulfillment of campaign promises. President Trump himself took to Truth Social, his social media platform, to urge the Senate to pass the bill quickly. On the other side, House Minority Leader Hakeem Jeffries and fellow Democrats warned of dire consequences, particularly for vulnerable populations who rely on the social programs facing cuts. Democrats have indicated they plan to use the vote on this bill as a key issue against Republican incumbents in the upcoming midterm elections. A less discussed but potentially impactful provision in the bill prohibits federal courts from enforcing contempt citations related to temporary restraining orders or preliminary injunctions, which could affect ongoing lawsuits against various policies. Ultimately, this legislation, if enacted in any form close to its current version, stands to have a profound and lasting impact on all Americans. It proposes fundamental changes to the nation's tax structure, the scope of its social safety net, its approach to environmental policy, and its immigration enforcement strategies. These are not minor adjustments. They represent a significant redirection of national priorities and government resources. Therefore, understanding the contents of this One Big Beautiful Bill Act is of paramount importance for every citizen. Its provisions will shape the American economy, the support systems available to individuals and families, and the country's fiscal health for many years to come, making informed public discourse about its merits and drawbacks essential.